There's some different tax strategies when it comes to real estate, and that's actually one of the things that makes real estate amazing is that it carries so many tax advantages. Now, when it comes to wholesaling real estate or flipping real estate, you're making some active income, so you're gonna get taxed, okay? And you could have capital gains taxes. Now, I'm not an accountant, I'm not giving you accounting tax advice, okay? But you might wanna ask your accountant about becoming an S corp if you're making a lot of money flipping houses, or you might have already done that. By becoming a corporation, there's a ton of tax advantages, okay? But the real tax advantages come with all the money that you make from wholesaling your real estate and buying passive income properties that pay you rent every month and pay themselves off. Those you basically, honestly, almost pay no taxes on. Rental income is taxed differently than earned income, and so it's taxed much less. On top of that, you have depreciation, which is phantom income, I like to call it. That means the government's going to give you a break on your taxes, saying, well, the property's worth a little bit less every year. But we know that really real estate usually, not always, okay, but typically is worth what it's worth. Maybe appreciating, but the depreciation on paper is allowing you to not pay taxes you'd have to pay. So there's huge tax advantages to rental real estate. And with fix and flipping, if you're not like a C corporation, you don't have any kind of structure, you just go out and you flip a deal, you're gonna get hammered with capital gains tax. If you carry it for more than 12 months, that's gonna save you a little bit. And going back to the rental properties, one of the most coolest advantages when it comes to tax strategies is that, and I just did a 1031, just closed one about 2 months ago, I think, here in Phoenix, a duplex. But you can, I've got a rental property, right? And I wanna sell this rental property and I wanna take the money and I wanna buy another rental property, but I'm making like 100 grand on this rental property that I'm selling. Well, the government says you don't have to pay taxes on that as long as you take all the money and put it into your next investment. So that's an awesome tax strategy. That's called a 1031 exchange. Fairly simple to do, actually really simple to do. There's a lot of stuff out there you can read and watch videos and it's confusing as heck, but really what a 1031 is, you gotta hire a company to do it. It's like, I think I pay them $1,000, or I pay them $1,000 to do it, and then per property that I'm buying, because you can buy up to, there's different ways you can do it, but usually you're going to be able to buy up to 3 properties. So I sold a property, I can go identify up to 3 properties. Now I only get 45 days to find those properties. So if I don't find anything, I'm going to either have to take the taxes or just buy something, settle for something. That's what's so amazing about wholesaling. When I 1031 my properties, I'll sell a rental property and I'll drop a huge direct mail campaign and cold calling campaign, and I've always got my pay-per-click going. But I'll drop the mail and do the calls towards the type of property I want to buy, and so I'll start getting those kinds of leads. And when my property's about to close, I'll then have a whole bunch of properties, and I'll choose from the best ones, wholesale out the rest, but I'll keep a bunch and I'll have built-in equity because it was such a great wholesale deal, and I needed to buy a piece of property anyway, so I just bought that and got a heck of a deal. So real estate, and then I'll 1031 that, and then it's awesome. Another tax advantage that's amazing about real estate is you can put debt on a property and you don't have to pay taxes on it. So let's say I buy a property for $20,000 and I sell it, or I'm sorry, I buy a property for $20,000 and it's worth $100,000. Does that happen? Yeah. I've done better deals than that, actually, believe it or not. But you can do that, and then you go out there, you buy it for 20, it's worth 100, so you buy it for 20, you can go out and get a loan for 80, and you get $60,000 in your pocket, you don't have to pay taxes on that money. And then the renters sit there and pay it back down anyways. So we actually had it was about 120,000, well, the property's worth about 180, but we got it for way, way less than that last year, so that's what we did. We closed on the property, and then we went out and got a giant loan from the bank for like 120 grand, took our payday that way with no taxes. And then now the property will still pay itself down over the next 10, 15 years. And we've got the cash flow from the property still, and we've still got a lot of equity in that property. So there's so many tax advantages to real estate. That's why basically everybody who really builds big wealth puts their money into real estate because of the tax advantages.